Hey everybody, this is Jake here with Jake Wu Market Research to go over the monthly candle setups for ES, NQ, RTY, so pretty much the S&P 500, NASDAQ, and the Russell 2000 futures, Bitcoin, and then about 8 to 10 different individual names here that a lot of people look at. I want to just go over a general overview of how they look for those that are interested. Before I jump in, just a reminder, this is going to be a very high-level overview, very much just the monthly candles, some general areas to watch to the upside or the downside. So if you are interested in more detailed analysis on the daily and the weekly candle charts, I posted all of my analysis for almost 25 names of some of the largest names in the markets for Twitter subscribers. I have a Twitter subscription for $10 a month. You can sign up directly through my Twitter page at Jake Wujastik. JAKE__WUJASTYK. It's also in the video description as well. On top of that, I do have a partnership with Optimus Futures, and this is a futures brokerage that I'm probably going to start trading some small money. I'm not really a futures trader, never been a futures trader, but I am likely going to be doing a video soon with somebody from Optimus Futures to go over some of the basics and how to set up an account, as well as just go over some of the basics on trading futures and how to trade them in general. So definitely keep an eye on that for maybe 2 to 3 weeks out. Not exactly sure when that video will be done, but definitely keep in mind that I do have that partnership with Optimus Futures. You can sign up through the link in the video description as well. And you can connect Optimus Futures to TradingView. So if you do want to still use TradingView, but execute your orders through Optimus Futures, you can do that too. So definitely check them out, as well as the Twitter subscription. As I mentioned, it's only $10 a month, and there's a ton of information that I provide that won't really be provided in this video. So let's jump into ES. One of the really interesting things here, this is a pattern that I've actually been following for the last probably 6 or 7 months, and it's a very simple pattern. It's essentially the MACD crossing to the upside. I know that sounds kind of extremely basic, but sometimes it's that simple. So the last time that we had a MACD cross to the upside was right after COVID back in July of 2020. And you have a very similar setup here to what we had pretty much starting in June when we had the MACD cross to the upside, where you had a candle or two where you moved up. In August of 2020, you had a really strong move up. You had 2 pretty red candles to the downside, and then you pretty much went straight up until December of 2021. And what's really interesting here is you have the same exact setup playing out, give or take, a candle or two. Nothing in the market is going to be the exact same pattern. So if you are looking for an exact same pattern in the market, you're not going to find it. You're always going to find some slight discrepancies between one setup versus another, but these patterns definitely do repeat in the market. And something that I think is pretty interesting here, from when we did have the MACD cross in June, we had that move up in July, and then we had a pretty strong 3-candle move down here in a row from August all the way to October, and we've pretty much gone straight up since. And so if we kind of take those candles currently compared to the candles that we had in 2020, if we take this candle from March of 2021, which is around the same exact time period that we are looking at in this particular pattern that's setting up once again and has played out, that would suggest potentially another 20% upside within the next 9 or so months. And what's really interesting about that is it pretty much coincides right with elections. So do we go up another 20%? I have no idea. I cannot read the future, but what I can read is this very basic pattern that did occur back in 2020. And for now, we are playing out almost exactly the same. As I mentioned, there's definitely some discrepancies between the month. As I mentioned, we had the cross in June of 2023 for this recent cross, and then the cross in 2020 was in July. So we're pretty much a month early on this particular setup here versus the 2020 MACD cross. But notice how similar even the MACD cross is with that the July 2020 cross versus the June 2023 cross that we saw this time around. And the pullback shown by number 2 here, almost exactly the same months that we had in this current move here for number 2 with the recent MACD upside cross in July of 2023. So a ton of similarities. definitely don't take this and say, okay, well, we're definitely going to be up 20% from the close of February's candle. But that's exactly what happened. And it's at least worth noting and at least having in the notebook of, hey, this is a setup and pattern that has played out before. So that would put the S&P 500 futures, E-mini futures, right around 6150 or so. So that'd be around ish 615 on SPY. Does it happen? We'll have to see, but that is just simply what the pattern would do if you're looking at, something that's happened in the past. And if you look at some of the patterns that I've posted on my Twitter, a lot of these patterns have set up pretty much the exact same from if you're looking at kind of a fractal point of view. So just something to consider going into the spring months of 2024. NQ, you have kind of the same pattern, but it wasn't close enough where I wanted to highlight it. The main thing I want to highlight here on NQ is just the fact that we continue to move very strong to the upside. And a lot of people forget that the markets can move to the upside a lot more than people think. And so, that is something to consider. Do we go straight up to this 1.618 extension at 20,650 within the coming months? That would be a pretty insane move. From here, that would be right around a 12% move, but at the same time, it's not completely out of the question. So the main area to watch here on the longer term side of things on NQ is definitely that 1.618 extension. These extensions essentially become self-fulfilling prophecies because so many people use these extensions, and you really do have to use the correct measured move as well. In this case, I'm just using the measured move. I'm essentially measuring the high from the high of November of 2021 to the low of October of 2022. That's the measured move. And then this 1.618 extension is just a function of that move. And so that's definitely something to keep in mind going into the rest of the year for that upside potential target, which is about 12% higher than where we are today. IWM is definitely one of my favorites, and when I say IWM, I mean small caps. In this case, we're looking at RTY, which is the actual Russell 2000 index and futures symbol. But the main thing that I'm focused on here is, one, we're still not anywhere close to all-time highs here, so we're definitely seeing a potential laggard play for small caps. Two, we had a pretty strong monthly close for February, and we're already moving up pretty strong going into March. And so what's really interesting about these volume shelf and volume gap setups is price can essentially, and I use this term all the time on my Twitter, kind of launch off of these volume shelves because they essentially create a base for price. And what happens is when you have a volume gap here, that essentially means that you don't have a lot of shares or contracts in this case for futures aggregating within this area. So you don't have a lot of volume to slow down price until you get to the next area of liquidity, which is anywhere from around 22.20 all the way up to the top of the next break-even supply zone around 22.75. So for those that are not familiar with the volume profile, I'm essentially measuring how much volume has occurred since the COVID low. So anytime you look at a chart and you see COVID low or all-time highs shown in the light blue with the black text, that is essentially the anchor point. So if you have been following my charts on Twitter and you're always wondering why I'm highlighting, specific pivot points and capitulation points, that's essentially just telling you where I'm anchoring the volume profile from. So that's where I'm starting to measure where volume has aggregated. And you can see here there's just not a lot of volume ahead. So price could move extremely quickly through this volume gap, and I think small caps could definitely have their day very soon. Something that definitely adds to the small cap thesis is the fact that Bitcoin is nearing all-time highs. Generally, when Bitcoin is ripping like it is, you have risk on in the market, risk on sentiment. You have people going into more risky type of asset classes. And so a lot of the time you'll see crypto, especially, Bitcoin, Solana, even Dogecoin, you will see them kind of front run the market, and then you'll actually see money kind of flow into small caps, higher risk assets in the equities market. And if you've even seen some of the large cap names, you've seen some of these large cap names like Apple and even Microsoft over the last few weeks kind of stall out a little bit as you've seen money kind of roll into other parts of the financial markets. And so Bitcoin is definitely a reason to support the thesis for small caps that they may definitely have their day soon. Now, you definitely have what's very much similar to an ascending triangle here. You definitely don't have a lot of highs since the October 21 and April of 2021 highs here. But this is, for me, I'm just drawing a horizontal level from those highs, and then I'm drawing this diagonal upsloping zone from the lows here back in August of 2015. And for the most part, you can see we have almost an ascending triangle type of setup. As we get near the resistance zone, this is definitely an area where you want to potentially look for price either rejecting or just a full-on breakout. Based on how things are looking, it looks like the full-on breakout is the higher probability here. Remember, everything we look at in the market is literally just a probability. If anybody tells you on Twitter or any other social media platform, this is definitely going to happen, just either block them or mute them, because there is nothing that is definitely going to happen. There's very high probability setups, but there's nothing that is 100% guaranteed to happen. But if we were to look at the crypto and the small cap setups here, it does look like the higher probability and relatively high probability that we do get some pretty big breakouts in the coming months. If we do get a breakout in a monthly close above the previous highs at 68,991 on Bitcoin, the next upside target, since we don't have anything to look at to the left, would be the 1.618 extension at 102,000, around 102,100. It's the exact number is $102,066. With Bitcoin or any other asset, you're never going to see it hit to the exact penny or dollar in this case. And the 1.618 extension is simply just this most recent measured move here. So the highs from November of 2021 to the lows of November of 2022. And as I mentioned, the trigger here would be a monthly close above the previous highs at 68,991. So we'll go into a couple crypto names that definitely could benefit from the Bitcoin and crypto moves in general. The problem is a lot of these miners, Mara, RIOT, CLSK, they do have a history of dilution. So if you look at, where these companies have been versus what Bitcoin's price is at, you'll notice they're nowhere near what they were when Bitcoin was at this price last time. That's because they like to dilute. They like to raise money. They like to do share offerings. And so, for example, back in December of 2014, Bitcoin was nowhere near an all-time high, but you can see how prices dropped because of these share offerings. And you can see that last time in November of 2021, when Bitcoin was an all-time high, this hit a high of almost $80 or a little over $80. Now we're back to almost all-time highs on Bitcoin, and we're only at 26. So that is the issue when these companies dilute their shares. They're essentially diluting the price of their shares, and that's why you don't see these miners anywhere close to the highs they were when Bitcoin was at the same relative price before. So for now, if you're looking at just the monthly chart here, we do have this previous support zone back from December and June and December of 2021. You can see that this area has acted as resistance multiple times so far in 2023 and early 2024. A monthly close above the top of this SR flip zone, which is currently right around 2620, would definitely trigger a breakout to potentially retest the highs here. But at that point, to retest the highs that we saw in November of 2021, I think Bitcoin would have to be very, very high, like much higher than its all-time highs that we've seen previously. So just keep that in mind. Miners are a good proxy, but when you do have recent dilution events like we did, you'll see them not move with Bitcoin like they did. And that's not shocking. Anytime you have a massive move up in price for any company, especially companies that are smaller cap, they like to dilute, they like to do share offerings, and that's exactly what's happened for Mara, but also RIOT. So RIOT is another one here that is getting very close to the apex of this symmetrical triangle. Symmetrical triangle is essentially just where you have two diagonal trend zones meeting near at an apex, and they're pretty much the same slope. That's what creates that symmetrical triangle side of the equation. And one thing to mention here is you do have the March 21 pivot VWAP right around 1781. So even if we did get a break and close above the top of this trend zone around 1615 on the monthly chart, ideally you would really want to see a monthly close above the March 21 VWAP, because notice how many different times price has failed to get above this VWAP. You can see literally it has acted as resistance so many different times over the last couple years. And if we actually get a monthly close above this area, which we have not had since the inception of this VWAP in March of 2021, that would be a huge status quo changer. So if you are looking on the longer term side, keep in mind the March 2021 pivot VWAP, which is currently at 1781. But remember, as price evolves and volume evolves, these prices change. So if you're looking at this video in a month, that VWAP may be around 1750, because anytime you have price trading below the VWAP is naturally going to go down because it's an average price of all of the volume that has happened since the high. So if you have prices that are occurring below this VWAP, then you have volume occurring below this VWAP, which will naturally bring the VWAP down until you get a price above that. So if you are watching this video in a month, who knows, maybe the VWAP will be around 1750, or we could have a massive move to the upside this month and the VWAP finally starts to curl to the upside, since you will then have price trading above that VWAP and you'll have volume occurring at higher prices than the VWAP, which would bring that VWAP, that average up. CLSK has definitely been a very good performer as well for the Bitcoin move, but still you can see that it's nowhere near what it was in the 2021 highs when Bitcoin, was hitting near all-time highs. So same thing here. This one does seem to really be the best name as far as a high beta mover to Bitcoin. You generally will see CLSK have the most percentage move if Bitcoin moves to the upside versus other minor names. But one thing I just want to point out here is we did have this breakout back in December of 2023. We retested this previous diagonal resistance zone. It acted as support, and now we're continuing to move to the upside. So if Bitcoin continues to do what it's doing and we do get that breakout of that ascending triangle, the upside target for CLSK would range anywhere from 31.75 all the way up to 42.60. And you have to remember, these miners are extremely volatile. That's why there's such a range here. So the way to use these zones and these ranges is, if you have a position at this price and we get to the bottom of the zone, maybe you scale out 1/3 of your position. When you get to the middle of the zone, maybe you scale out another third. When you get to the top of the zone, maybe you scale full out. So these zones are not meant to be like, oh yeah, we could hit anywhere within 30% of this range, or this 30% range. Zones can be really helpful when you are looking for scale out points. So bottom of the zone, maybe I scale out. Or if price is moving down into a zone, maybe you scale in 1/3 there. Or whatever your strategy is. I'm just giving a basic example here, but that's how you can really use these zones. So you're not just selling at one exact price. You're kind of just slowly taking capital off the table and locking in profits as you get into this area. And you can kind of use it as like, okay, maybe the bottom 1/3 is my green zone, the middle 1/3 is my yellow zone, the top 1/3 is my red zone, and you use that in your scaling strategy. For those that aren't familiar with scaling, it just means that you're selling fractional portions of your position. So that is CLSK. Let's jump into Coin. Coin is one that is breaking out here. So if we just remove this SR flip zone, you can see that we are starting to break out here. However, horizontal zones are arguably more important than diagonal zones because price a lot of the time has memory. A lot of people remember, okay, last time we were at this support zone, we broke down from the support zone. And so and the thing with horizontal levels is they're static, right? They don't change. Diagonal zones change as the candles evolve because there's a slope aspect to the diagonal zone. Whereas horizontal zones are static, right? They're just a straight line. So yes, we're breaking out of this diagonal zone, but really the main area that I would want to see a break and close above on the monthly chart would be the top of this SR flip zone at 225. And for those that aren't familiar with SR, that just means support resistance. So anytime you had previous support, flip to potential resistance, or resistance, flip to potential support, that would be a potential SR flip zone. So that is definitely an area to watch on Coin going into the month ahead. And most of these names I do analysis on a daily basis, so daily and weekly analysis. I don't do CLSK. I may add that to the list, but a lot of these names I am updating a lot more than just once a month or every couple months. So if you are interested, just a reminder, click on the link for the Twitter subscription sign up, $10 a month. It's, there's been a lot of good feedback recently as far as getting value out of the $10 a month. NVIDIA, this thing just continues to melt up, but we are starting to near this diagonal trend zone above. And what's really interesting here is that you have this 3.618 extension, and this is the most recent big measured move. If you wanted to take this smaller measured move, you could use this maybe like on a daily or a weekly candle. But if you wanted to really take the most relevant large downside move, which would be used as your measured move, it would be from the November 21 high to the October 2022 low. So that's your measured move. And then we've already broken through the 1.618, the 2.618. So the 3.618 extension is the next level you'd want to watch to the upside, which is currently at 970. And what's really interesting is notice that this diagonal trend zone trades is right in line with this Fibonacci level as well. So right, especially if we did it within the next month or two, that would literally align almost perfectly with the top of this trend zone. So going into the next couple months, if we do continue to move up, especially for, in general, the semiconductor sector, I don't see NVIDIA not participating in that, even though the market cap's getting kind of crazy. 970, anywhere from 970, I'd say up to $1,000 just as like a psychological level would be your upside level to watch for NVIDIA. Tesla, this is one everybody just loves to hate, or you just love it. Either way, you do have a very interesting setup here. You've got an inverse head and shoulders here. Yes, I know it's not perfect. Yes, I know that we don't have a perfect horizontal neckline. And that's one of the biggest issues people have in the market, especially when they're doing technical analysis, is they get so worked up on an actual definition that they don't realize that there are different setups that mimic textbook setups, but they're not exactly perfect. You can have like more of a diagonal kind of neckline here, i.e. this. And so if we were to move up, and what I did here was I just took, to create this zone, if you guys want to see that again, I literally just took the wick here, connected it to this wick here because that's kind of your furthest out wick. Or if you wanted to use this one, I mean, technically that would be the one you use. And then I'm pretty much just bringing it to this wick here. So now we have a zone. Instead of connecting pretty much just 3 points on the chart, we're now connecting multiple points here, which creates this zone kind of feel. So if we were to move up here on the monthly chart, and it would be really shocking if Tesla doesn't finally catch some type of bid here as almost a lagging type of play. Tesla's market cap relative to some of these names is just really just not big at all, especially because this is not just a car company, it's a technology company. Elon definitely kind of drives me crazy sometimes, but the guy's smart. He knows that he can't just create Tesla as a car company. So if there is some type of news out in the next couple months, I wouldn't be shocked at all to see at least a test of this diagonal zone, which ranges in the next. Okay, so this is something I want to point out. If we were to move straight up this month to the top of this diagonal trend zone, it would be right around 270. If we move this over, this would represent the month of April. So if we moved all the way up here in the month of April, that would put us around 267. If we move this over, this would essentially be your May candle. If we moved up to the diagonal trend zone in May, then your level would be around 263.50. So remember, if you're using diagonal trend zones, they are sloping. So if you have a downward sloping trend zone, the longer it takes to test the trend zone, the lower that price is going to be. So if we were to just magically somehow move straight up this month, 270 would be the top of the trend zone, anywhere ranging from around 255 up to 270. If it took, let's say, until May, that would be anywhere from around 247.25 all the way up to around 263.50 or so. So just keep that in mind if you are using diagonal trend zones. That does not apply for horizontal levels because they're static. They're just a literally zero slope line, so the levels don't change. If you were looking at the shoulder here and a potentially invalidation of this inverse head and shoulders, the bottom of this zone is right around 179.85. So if you had a monthly close below 179.85, this inverse head and shoulders would definitely be invalidated. But overall, I'm going to call it an inverse head and shoulders. If people don't agree with me, that is fine. Apple is one of those names that really has had not a great last few months. And you can see here that we're kind of right at the tip of this ascending wedge or rising wedge, whatever you'd like to call it. And you can see here that we're trading right at the bottom of this ascending wedge trend zone here. So we are kind of at a make or break here, but the same thing that we just discussed kind of with RIOT, even if we did get a breakdown, I think the stronger area that you want to focus on here is the January 23 pivot VWAP, which is currently at 173.23. So yes, you could have a slight breakdown of this ascending wedge on the monthly chart, but as long as price holds above this January 23 pivot, which as I mentioned is at 173.23 currently, you can see that this has been a very important level here. So if I pull out this arrow, this VWAP has been respected multiple times. And notice that even though we've broken down intra-month through this VWAP, there has not been a monthly close below it. So you really want to look for a monthly close to kind of change the status quo of this VWAP. So for now, 173.23 is definitely your main level you want to watch going into the month of March to see if that level holds for Apple. All right, so we have AMD, which is also another chip name, semiconductor name that has just blown up over the last 5 months. And you can see here that we finally broke out of this previous all-time high zone from December of 2021. We broke out of that in January of 2024. You can see February, we pretty much went straight up, closed near the high. And you can see the first day of March, we're already up, what is that? We're already up almost 5% from today's high. So the natural thing to look at as an upside target is simply just the 1.618 extension of this measured move. Remember, if we're at new all-time highs, there's nothing to reference to the left of the chart. So what I mean by that is if you look to the left to see, okay, is there a previous pivot? Is there a gap or anything? Well, no, because we're at all-time highs. So you have nothing to reference from that aspect. So what you do is you use the 1.618 extension of the most recent measured move, the most relevant measured move. In this case, that is definitely the November 21 highs to the October 2022 lows. And so the 1.618 extension of that measured move is at 232.37. So, if you wanted to just give yourself a zone, I'd say 230 to 235. And this is another name that I definitely do analysis on daily in the Twitter subscription. SMCI is one that we haven't really been able to reference anything to the left for a couple months because we just continued to move to the upside here. One thing I'll mention is the most recent measured move is really this move here. So pretty much the high of August of 23 to the low of October of 23. And we almost hit the 6.618 extension in February, missed it by, I don't know, $10 or so, $15. So if we were to continue to move up into the month of March, the first level that you'd want to see here to break and close above is 1089, which is that 6.618 extension. And that just shows how extended this is getting, but that doesn't mean, anything other than it's just making a massive move. If we break above that, your 7.618 extension is right around 1220. So those are definitely levels you want to watch. Around 1089, I would just say 1090 to 1100, and then 1200 to 1220 would be what I would kind of look at. I just don't look at things in exact prices. The only thing I look at in exact prices is gaps, right? So a gap has two levels: the bottom of the gap, the top of the gap. And there is no zone for that. You can use the gap as a zone, the top and the bottom of the gap as a zone, but the actual gap fill is a precise level. Same thing with the VWAP, it is a precise level. But even with the anchored VWAPs, I do like to use zones and percent offsets versus just using the actual perfect price, which price rarely respects to the penny, but it sometimes does. Anchored VWAP is one of the few tools out there that price will respect sometimes almost to the penny. Last one we'll go over here is PLTR. You can see here that we do have this volume shelf This is a great case study on volume gaps. So we discussed that volume gap in IWM. And you can see here that how quickly price can move through these volume gaps. You just don't have a lot of liquidity holding price back. So price can move very quickly, kind of like a vacuum. Or if you're a football player, whether you watch football, American football, or European football, same thing, right? If you don't have a lot of defenders in front of you, the player can move. The player can speed up. They can really, move quickly to the next line of defenders. And so you can kind of look at these volume shelves as kind of the next line of defender. Now, generally, I would have this as break-even supply. However, I have this as a green volume shelf because price right now is technically above the point of control of this volume shelf, right? The point of control technically is way down here at $7, but if you were to just look at this kind of 3-bar volume shelf, the longest volume bar, which ranges anywhere from around $23.95 all the way up to around $24.70. Price is trading above that. So technically, if you have price above that point of control, these volume shelves can definitely turn into quote unquote launch pads. And so if we did have a move up, the main area that I would look at is just this previous high from June of 2021 and the previous high from September of 2021. And you can see that, not a ton of upside here before you hit that next level of potential resistance. We are trading at 2487. Is that right? Yeah, 2487 right now. This zone above, it ranges from 2750 all the way up to 2930. But remember, anytime you're in the markets, you do want to take things incrementally, right? Don't look at the previous all-time highs as your target if we haven't even gotten through this next level of resistance. So you always have to look at things incrementally. If price breaks above this level, then this is my next upside target. Sure, if you want to say, okay, well, I'm entering for all-time highs, you can do that, but it's a lot more systematic to create these if-then kind of, if we break above the next level of resistance, what we just said, what was 2930? If we get a monthly close above 2930, then the next upside target, in my opinion, would simply just be the previous kind of tweezer top here that you had in January of 21 and February of 21, which is right around 35. So that's really how I look at things in my subscription is if then, that's how you can keep things systematic. So, that's really all I have for this monthly overview. As I mentioned, remember to definitely check out Optimus Futures if you are a candidate for the futures market. I did mention I probably will be doing a video with someone from the company going over what are futures, what are the advantages, how can you get set up, especially on Optimus Futures on their platform. So definitely be on the lookout. I'll do an announcement when that becomes set in stone if we do it. And overall, hopefully this video was helpful and you found value and some levels that you may have not thought of. And once again, would love to have you as a subscriber. It's $10 a month through Twitter, and it is daily analysis as well as a weekend analysis. I go over the top setups that I like on a weekly basis, as well as I like to share setups that I like on a monthly basis as well. So there's a lot of things that you can get from the subscription for only 33 cents a day. Thanks so much for watching. Please like and subscribe if you enjoy these videos, and definitely check out my educational series that I have on my channel as well. There's a ton of different videos that go over more in depth on volume shelves, the volume profile in general, anchored VWAP, SR flips, all of these different things that I use in my day-to-day analysis. Thanks again for watching, and we'll see you next time.